Hi, everybody, and welcome to another Future Impact Skills profile. Today, I'm here with Ogi Jovanovic from Rest Super, and we're talking about investment underwriting and due diligence. We're talking about it in private markets. So, Ogi, let's just start with the basics. What are private markets?
Hi, Yolanda. It's good to be here. Private markets basically represent the portion of the market which is held privately and not on a listed exchange. So your listed side is typically shares and over-the-counter type instruments, whereas private markets are typically the same types of underlying assets, but they're held in different structures. So they might be held in wholesale funds or directly owned, for example, like your own investment property.
Okay, great. So it's kind of like real estate and infrastructure is another big part of private markets, as I understand as well, and private equity as well.
That's right. Yeah. So private equity is a great example of the same sort of companies, but they're just not on a listed exchange. They have to be accessed in a different form.
Got it. Okay, great. And today we're talking about real estate, which is the asset class that you're focusing on. Right. Tell us about the role of investment underwriting and due diligence in that investment, in that process. What is it? And then we can go into the steps of what's involved.
Yeah, sure. So investing as a whole can be broadly broken down into sort of three phases. There's the underwriting and the going into an investment phase, making sure that you've identified the right trends and thematics and picked the right investment for your portfolio. And then sort of after that part is done, there's the asset management phase, so holding it, operating it well, extracting value. And then there's the divestment phase, which is sort of getting a good exit price to get an overall good total return. So yeah, the part that we'll focus on today is the underwriting and that entry phase.
Great. So if I play that back, it's kind of like just basically finding the best asset to complement the portfolio that you've got to generate long-term, superior longer-term returns overall in the portfolio.
Yeah, that's right.
Great. So tell us a little bit about what's involved then.
Yeah, so it's a pretty lengthy process. And it involves a lot of touch points. So I guess overall, the first stage is kind of like your thematic research, which is something that you're always doing. It's a continuous process, and it's sort of how you stay up to date with the market. So there's a lot of resources that are available to assist with this, whether it be sort of paid subscription type research and analysis. A lot of investment managers come through and they have their sort of research teams that they offer up to sort of assist with investment selection. There's talking to peers, talking to people within your own fund, but in other sort of asset classes. Agents and brokers, they're another good source of information and sort of the up-to-date, on-the-ground type analysis of what's happening in the market. And then the listed market, so we spoke about private and public, but the listed market deals in the exact same underlying assets. So it's often a good indicator as to what might be happening on the same types of assets, just in a different sort of form. And then the other one is sort of academic research.
So if we were to bring that to life a little bit with some practical examples, so you're effectively looking for sector trends and themes. Is there an example of something that you're looking at the moment, or that you've looked at recently, that would give us a bit of color? What do we mean by a sector theme and trend? Is it location based? Is it subsector asset class based, like type of property? What's the kind of stuff that you're analysing there to inform that selection process?
Yeah, so you can sort of take it from like a mega trends sort of perspective. So at Rest, we've got our 5 Ds, the mega trends. So that's decarbonisation, debt and central bank policy, digitalisation, deglobalisation, and decarbonisation. From there, a good example that we're sort of currently seeing in the market is something like an aging population that's happening in a lot of advanced economies. So if you look at the number of people that are turning 80 over the next 5 years, that cohort of the population is growing massively, and the number of or the amount of seniors housing and aged care facilities that exist today is simply not enough to sustain that population growth. So that points to a sort of a positive supply and demand dynamic that looks attractive from an investment perspective.
Right. So you're looking at those big themes, and then you might go in and be looking at, well, where are the locations of those assets that are going to make the most sense, and the providers of those assets that make the most sense. So is that where the due diligence piece comes into play?
Yeah, that's right. So yeah, once you've sort of identified, say, that as a sector thematic that you're interested in, sort of the next part of the process that you want to sort of do and understand is your portfolio analysis. So your inwards looking analysis to understand, well, what are your own criteria? So that'll involve basically knowing yourself as an investor. What do your beneficiaries require? What does your portfolio require from that next incremental investment? So that'll look at your actual portfolio, understanding how you're positioned in terms of sectors, geographies, risk profiles, and also liquidity. And then start to look at, well, what do you need to ramp up on versus decrease exposure to?
Yeah.
Organizationally as well, there are some sort of factors which help you rule in or out certain potential investments. So the level of ESG focus, for example, can be a big one. The costs associated with certain investments, and as well as strategic partnerships that you might have broader in the broader market with certain partners that are out there. So this step is very important because it helps you understand what's going to be suitable to you. It helps you distill the set of opportunities that are out there, and it means you don't waste as much time doing due diligence and things that were never going to work.
And I imagine as well, I think for a lot of young people thinking about, what's involved and when you're making these decisions, and, these assets are, they're significant exposures, right? So they're in the tens of millions or hundreds of millions of dollars if you're buying big portfolios, for example. And that there's a process to inform that to ensure that it's the right exposure for the portfolio, as you've just described. A whole lot of data that you're analysing by the sounds of things, and a lot of relationships that you need to be cultivating in order to do that well and continue to build up the sources that inform the decisions.
Yeah, I think the relationships is a really good point. There's probably 10 to 15 separate professionals and experts that you would engage from end to end on a process like this to, say, deploy a couple of $100 million in a fund in real estate. So that can range from asset consultants, agents, ESG experts, lawyers, tax lawyers, engineers, technical due diligence experts. There's a pretty broad range of people that you have to interact with to basically prove up the assumptions that have been presented to you. So that when you go and present to your investment committee, you can have confidence in what's being presented. And that's probably the best part of the role altogether.
Well, and that's kind of a good question to go to, best parts, worst parts of the role. And I think it really kind of talks to, doesn't it? Like, so much of investing is as much of the so-called soft skills, interpersonal relationship skills, so important as it is the technical skills. So for you, what's the best part and the least best part, or maybe even the worst part of the role?
Yeah, look, the best part is the interactions. Being sort of exposed to basically a lot of experts in their field, a lot of very smart people who come up with a lot of very good insights, and sort of sitting in the middle as the playmaker, you do get to pull all of that together to invest capital and sort of make the ultimate decision. So that's probably my favorite part. You're always in the market having conversations, even if you're not actively investing. And it really emphasizes the importance of having a good network.
I love that playmaker. That really, that's such a good, I can see you kind of, as the super funds, and the super funds are getting bigger and bigger and more influential. You really are at that center point, aren't you, of bringing all the pieces together in order to be able to create the opportunities that are securing our retirement future, but also facilitating these significant capital market transactions. Deeply rewarding, I'm sure.
That's right, and it's something that you have to take very seriously. Because they are pretty significant check sizes. So sort of asked earlier what's a least favorite part is it's, sometimes good deals don't always go ahead, and it can be frustrating because you might put a lot of time and effort into these things, but you have to remember that you are conducting a fiduciary duty, and it's often for the best reasons in the long run, and you are part of a broader team is part of your portfolio.
And I suppose, part of that should be the expectation that you'd almost want some deals to not go ahead. Otherwise, you're almost not doing your job. If everything's green lit, then there's a question mark, isn't it? And so if students or young professionals that are keen to learn more about this are interested in digging a little deeper, what would you recommend they, look at or study or get their teeth into it? Where should they go to find out more?
Yeah, so thinking about typical sort of career paths to get into, say, the real estate side of super fund investing. The most common is probably through valuations. So valuation firms tend to be a big source of people coming into the industry. But there's a lot of lawyers, engineers, bankers that have sort of had varied career paths and sort of ended up in the industry as well. So it is a pretty broad set of skills and backgrounds that work together in a complementary way to build a good team.
Well, I mean, that's such a great piece of insight, right? That, I think sometimes when we think of investing, the career path into investing, it's this typical path of some kind of business finance degree into sell side, like investment banking, management consulting, or equities research, and then into stocks. It's like the cliche, but there is so much more to investing, so many more asset classes and so many different skills that mean so many different pathways to come in. But ultimately to be in this kind of, deal maker role when you're in these big super funds of really allocating capital, significant sums, and enjoying the intellectual stimulation and the networks and conversations in the process. So thank you so much for shedding a bit of a light on it for when it comes to, underwriting and due diligence in real estate, and particularly the insights into super funds, Ogi. It's been really great. Thanks so much.
Thanks, Yana.